Welcome to Alpha Insights. I'm Jeff. Today we're zeroing in on the cannabis sector and what the recent federal policy shift means for businesses and markets. Joining me is Jonathan, our market analyst. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Jeff. Great to be here.
Quick housekeeping. Markets were closed on Sunday, May 31st, and the last U.S. trading day was Friday, May 29th. So when we talk about market reaction, we're talking about the picture heading into the long weekend, not intraday moves.
Exactly. And that matters because the story this weekend has been policy headlines, not consumer trends.
Let's start with a big development. The Department of Justice downgraded medical cannabis classification. Jonathan, walk us through what that actually means in plain English.
Sure. In simple terms, rescheduling at the federal level can remove some legal barriers that make it hard for cannabis companies to get standard business benefits. Things like certain tax treatments and perhaps reduced enforcement risk. But here's the catch. Rescheduling itself doesn't automatically rewrite tax rules. Treasury and the IRS need to issue follow-up guidance for businesses to realize practical benefits.
So rescheduling opens a door, but someone still has to show you how to walk through it.
Right. And the real question here is timing. Without a roadmap from Treasury or the IRS, companies and state regulators are left guessing about compliance and reporting.
Guessing is never fun for a CFO. Now, there's also immediate legal pushback from a few states. What's happening on that front?
Attorneys general from Nebraska, Indiana, and Louisiana have sued to block the rescheduling order. Those suits argue that rescheduling creates enforcement and legal conflicts at the state level. The practical effect is potential delay. Courts could issue injunctions or slow implementation while they decide. So expect headline-driven volatility until a legal path forward is clear.
Interesting.
Yeah, that's a good point.
Let's talk data. California reported solid tax receipts for the first quarter of 2026. Tell listeners what those numbers look like and why they matter.
California collected $248 million in cannabis tax revenue in the first quarter. That breaks down to about $143.6 million in excise taxes and $104.3 million in sales taxes. Those figures show steady consumer demand in the largest legal market in the country, and analysts will use them to model company revenue and state budgets.
So the demand picture, at least in California, looks resilient, despite policy noise.
Exactly. I mean, when you look at the data, it suggests consumers are still buying. But revenue numbers are just one piece. Regulatory clarity affects costs, taxes, and banking access.
You mentioned state conflicts. Hawaii had a story about firearms permits and medical cannabis patients. How does that fit into the bigger picture?
Hawaii reported denying 47 out of 163 firearms permit applications last year because applicants were medical cannabis patients. That highlights ongoing friction. State medical programs can clash with other regulatory systems. Even if the federal classification changes, state-level rules on things like permits and licensing could still create operational constraints.
Investors will want to know what to watch next week. What's on your checklist?
First, monitor court filings from the states suing the Department of Justice. Emergency motions or injunctions could pause implementation. Second, watch Treasury and IRS guidance closely. Published rules on tax treatment would be a major catalyst. Third, read state regulator advisories. They'll tell you how licensees should act. And lastly, keep an eye on more state tax reports to gauge demand trends.
Any specific names or funds listeners should follow for corporate cues?
Follow the broader cannabis ETF called the Advisor Shares Pure U.S. Cannabis ETF for fund flows, and on the company side, watch Trulieve, Green Thumb, Curaleaf, and Tilray for management commentary and quarterlies. Those names often lead sector sentiment.
Got it. How should listeners think about positioning without getting into personalized advice?
Be selective and align your time horizon with the policy timeline. If you want clarity soon, A short-term approach may be better because headline risk is high. If you're thinking longer term, rescheduling could eventually reduce some federal burdens, but the path is uncertain and will likely be bumpy. Analysts note that legal risks and the timing of Treasury and IRS guidance are the central unknowns.
Short reactions. What's your quick take in one sentence?
Rescheduling is a big potential tailwind, but implementation and lawsuits make the near term ambiguous.
Honestly, I was a bit surprised by this one.
Before we go, give listeners 2 to 3 key takeaways.
1. The Department of Justice's rescheduling is meaningful, but practical benefits hinge on follow-up guidance from Treasury and the IRS. 2. Legal challenges from state attorneys general could delay or limit implementation, so expect headline-driven volatility. 3. State data, like California's $248 million in first-quarter tax revenue, show continued demand. But state-level contradictions will keep operational risks in play.
Great summary. Quick reminder, this is for informational purposes only and not personalized investment advice. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Jonathan, thanks for joining.
Thanks, Jeff. Always good to dig into these nuances.